I'm going to jump into the presentation, but just in terms of presentations, my name is Afonso. I'm one of the co-founders of NetNada. And also on screen, we have Loki, also named NetNada. You might know him from a lot of the customer support he's been doing with the team in getting people ready for climate reporting, especially our group 1 and 2 clients. And then we also have Marco, which is one of our partners from Acumentis, and he'll be presenting more at the end of the session about building readiness assessments and understanding, where you stand in terms of your level of maturity to start your climate report. Marco, do you just want to say hi before we jump right in so people can recognize your voice?
Yeah, thank you, Afonso. Thank you, Loki. Great to see you both. Hi, everybody. Really, really excited about having this session. Yeah, we'll get into some of the lessons that we've learned by both doing the SRS reporting ourselves as well as helping Group 1 companies, which not many companies get to do. So there is a lot of lessons that we'd love to share with you. So just hang tight and we'll get straight into it.
Awesome. At any point, Michael, feel free to interrupt you. Same thing for Loki, and I might put some questions back to you. So stay tuned. Quick recap about the series. You should have 5 calendar invitations on your calendars. It's 5 sessions, and the 5th session will cover the strategy and report writing. If you can't make one of the sessions, we are aiming to record all of them and then release them later. Of course, your participation and the questions that you ask in the chat really enhance the experience for you and everyone involved. So please do so at any point. Loki, if any questions pop up in the chat, please do let me know and feel free to interrupt me. I'm really excited about session 2, which will be done with KSIB as well, especially in that governance and auditing component and what an audit pack looks like. And session 3 on metrics and targets will be done with our partners Net Zero, which have a lot of extensive experience on boundary mapping, data preparation, and ensure that everything is done with robust methodology so it's ready for auditing. So don't miss those sessions. Everyone by now knows how to use Zoom, but please do use the Q&A feature or the chat box to interrupt me or raise your hand. And feel free to ask questions at any point. Today's agenda, we're going to cover a bit of the framework. Then we're going to talk about readiness assessment, and we'll look at examples of reports and benchmarks. At this point in time, I would assume that everyone is familiar with a version of this table. But to summarize, this table outlines which organizations, depending on the criteria, have to report. So if you are supporting a client or looking at your own company, make sure that you have this table kind of burnt into your minds and circulate this internally, get your metrics in place and see where you land on this table. Of course, Group 1 companies are already reporting, but in terms of the Group 2 and Group 3, one thing to be particularly conscious about is that this is your consolidated gross revenue or assets or employees at the end of the reporting period, which means you might have started your reporting period as a Group 3, as an example, but then you went through like an acquisition, or you had fantastic growth, you increased headcount, or you moved people from contractors to now being in-house. That might trigger that halfway through that period, you jump groups, okay? So please ensure that you also not only look at a point in time of where you are, but try to speak with your colleagues or have access to forecasts to see where you land at the end of that reporting period. Okay? If you are, also the same thing applies if you're not in Group 3 and you're jumping into now being a reporting entity, the same thing applies. And one thing that we also like to say is that if you are a Group 3 company, most likely your pressure to report will come from your clients more than the legislation. So most likely you'll have requests for information that fit within this AASB report before you actually have to do it by law. So just be aware of that, the timing where transparency and sustainability reporting, a revenue acceleration mechanism might happen before you even have to do it by law. Feel free to screenshot this page. Of course, we'll be sharing the presentation afterwards, but this is something you have to keep in mind. And also that your reporting period can be calendar, can be financial, or can be a combination of whatever fits your company. So just be aware that this is not set in stone in terms of being like July. It's on or after July. So that's who has to report. But what's this all about? I always like to kind of have this slide open, and then I'll show you a bit of the copy of the legislation itself. This is basically a regulation or a law that aims to force organizations to be more transparent with their primary users. So primary users in this case would be a stakeholder, an investor, consumers, of how a changing climate will impact their company. This is not about organizations being sustainable per se. It's about if the climate is changing, so it could be political climate, regulations, and physical climate, how do these things impact your ability to have a resilient business, to make money, to employ people, to keep your assets safe and valuable? It's about that, okay? So while it might be named a sustainability report or you actually submit, this is about how a change in the environment might impact how you do business. So having those things in mind, you also kind of inherently jump into, well, to be in business, I have to make money, which means it's a financial aspect of my business. Therefore, the name of climate-related financial disclosures. And with any forecast and any projection that you do, either you're in marketing, in operations, in sales, there's different time scales that you look at your business, the immediate, quarter by quarter to a whole yearly goal. The same thing is supposed to be applied in these disclosures. They are asking organizations to look at what happens now immediately in your business and then project as well into the future, as there might be different temperature changes, different consumer requirements, and so forth. So to summarize, we call these the climate-related risk and opportunities that affects the company's future and how you stay in business. And that's kind of why this law exists. It's not about having a sustainable company that sells sustainable products and kind of that particular information. Everything that I say has the foundations of the regulation itself. You can access the AASB S2 standards online. It's not that extensive. Yes, it's a bit dry, but I really recommend that you kind of download that, maybe put it inside ChatGPT or Claude and start asking back and forth questions, always asking for references when an answer is spit out, so you familiarize yourself with the requirements. At this point in time, I can already Control F straight into the document on in which pages certain things exist, but having this handy or within your LEM of choice might be super valuable for you to be able to answer quick questions about the legislation. One thing in particular, this changing climate or these risks and opportunities, there's different types of those. So we have the physical aspect, which is what you experience, like temperature change, rainfall, hurricanes, storms, heat waves. And then we have the transition, which is things like consumer preferences, new laws or legislation that forces companies to do certain things, aspects of big bodies enforcing things in the industry. So just being aware that there are two aspects to this report. Now, when 2 years ago this law was introduced, or these two standards were introduced, there were two that were released, two standards. One of them is voluntary, that actually has the word sustainability and is more broad. And the other one, which is the one that everyone talks about, is the S2, which is mandatory. This mandatory is the one that has the word climate in it. This is really important to be aware because you might see some leading companies that are also doing an S1 report. So to not get them confused while they look through examples or you look at press releases or you deep dive into their sustainability pages, just be aware that there are two standards that were released. One is mandatory and the other one is voluntary. We have a course specifically on the mandatory standard, which is the S2 in the NetNada Academy. So you can feel free to check that out. And of course, some requirements of the voluntary standard kind of also overlap with the climate one. So if you do one, you're already progressing towards the other if you wish to kind of also align yourself with that. The standard itself, the S2, you might have heard the word pillars at this point in time. So there's 4 sections of the report. I like to say there's a 5th one, which is the auditing of the report. But you have to mention or to structure how you create this report, and you go about it in 4 different sections. You need to nail your governance, your strategy, your risk management, and your metrics and targets. I recommend that organizations do governance, risk management, metrics and targets, and then do strategy, because the strategy aspect is your narrative that links everything together. Of course, everything is interconnected, but just being aware that you can do things in parts and in different sections really helps out with the process. There is some studies we've done last year in terms of how ready companies were to report that show that the risk management was one of the most misunderstood aspects of the report because it involved things like climate scenarios, which was a new term, and forecasting and workshopping. So if you're going to put some energies or you're trying to double down on something or asking for external help, risk management might be a good way to start on that. And also being aware that, while the risk management, the governance, and the strategy might be in a qualitative aspect, the metrics and targets, you actually need a lot of hard data to be able to report on that section. So understanding the time commitment of your colleagues to nail that is also super important. The fifth section I mentioned is the auditing or getting assurance on your report. I mentioned this as a different section because it might consume a lot of time with the back and forth with your auditor on providing information, then providing comments, you fixing those, and then getting final sign-off. But understanding that the assurance it's not coming all at once. There's different sections that require limited assurance in year 1, and then they expand into year 5 and 6 as reasonable assurance. And just because there is no assurance, it does not mean that you don't have to report on it. So even though you're not getting assurance on your transition plan or your risk management, does not mean that you can skip that in the report, okay? So it still needs to be there. You just won't get assurance, or it's not mandatory to get assurance on that, similar to Scope 3 emissions and climate-related metrics and targets. Also, super good table to have available to always check where you're putting your priorities, because you want to make sure that you're nailing the sections that have limited assurance to begin with, save on your audit fees and the back and forth with your colleagues. Any questions on that so far? On the pillars to be covered, on the different assurance timelines, the different pillars, or the different type of reports, the mandatory one and the voluntary one?
I don't see any questions in the chat, but there has been a point made by Aparna who said that they put their strategy and risk management sections together instead of keeping strategy at the end. So it's just a more of a comment than a question from the chat.
Perfect. I've seen it also in some of the Group 1 reports. What I mentioned in we're seeing success in terms of building it last. When it comes to organizing the report, it might be your second section as an example. It might go from governance to strategy, but it's just that when you're building the narrative, it might be helpful for organizations to build that last and then reposition it in the report. But it's a very good comment. Really appreciate it. Anyone else has a comment or a question on that section? Perfect. All right. So I've mentioned the 4 pillars, and I won't spend too much time on this because we're going to cover it individually in each follow-up session. But there's some key names you have to start familiarizing yourself with. One is the concept of reality, which is what is relevant to your business. You might go and look at a lot of risks when you do your risk section, or you might look at a lot of potential strategies that you want to pursue, or look at different categories of emissions. Your goal is when you put this report together that you will apply a materiality approach to it, and you only surface the things that are relevant for the business. It's not about having an extensive report. It's about having a report that is informative and is useful. So just having that more is not better, but actually being precise or being direct might be really helpful for your readers and also for your auditors. The other thing as well is that we're trying to compare different timelines and compare different scenarios. So understand that while you're doing this exercise, there are kind of parallel timeframes between the short term, medium term, and long term, which is really important. And finally, another term is this climate scenario analysis that is kind of scares people, but is basically saying, well, the world is moving in a certain direction with current technologies and laws, and that might impact the climate to warm up to 1.5 degrees, and that has consequences. And then you have to analyze how your business looks like in that scenario or that universe. And then you have to do the same thing and approach it for a second scenario where things are more extreme, where we don't mitigate climate change, where there's more warming or different laws coming about, and then project how you might be impacted. So in one, it might continue as business as usual, while in the other one, you might have to relocate your facilities or your warehouses because you are in a flood area and will be more severe over time. So there's just some really practical examples, but these terms is something that you want to familiarize yourself with. To make things easier, and this was feedback from everyone in the past sessions, What we're trying to do is show you what it actually looks like after you've been through the work, because it has been easier to reverse engineer the outcome and then go through the correct steps to get there than starting from a blank page. One thing that we recommend, and I'll show in the following pages, is looking at examples of financial disclosures and actually look at the tables, look at the graphs, read the sections that you're most fearful about or not sure about, and understand how it's communicated at the end of the journey. The University of Sydney report that they've released late last year is a super valuable resource for everyone because it's concise, it's not extensive, it doesn't overpromise, it's quite easy to read, but you can have an idea of if you want to do physical risk analysis and you're going to communicate that. How do you communicate? Okay, a simple table with 5 rows and 4 columns is enough to kind of communicate what happened behind the scenes. So you're not, like I said, it's not you're trying to be extensive, you're trying to be precise. Same thing as showcasing your emissions. Of course, there's the whole methodology and method of preparation that you get to your auditors. But when you're going to communicate it, a simple table might do the job. On top of that, there is some firms like this one is from KPMG that analyzed the first report that came out early this year for Group 1 companies. And there's a lot of insights that they prepared, but there's a couple ones or a specific one that I like to mention, which is the length of the reports. People look at sustainability reports and they feel that, they needs to be glossy, it needs to be long, full of pretty pictures, and it looks very expensive. You can make sustainability report align with AASB S2 in formatted Word documents and with 11 pages. Okay. So just wanted to kind of showcase that you can make these reports without over-investing in trying to make it look pretty, but trying to make it relevant for the people who are going to read it. So that's one particular thing to kind of demystify how long they need to be. Of course, be aware that the first Group 1 companies are very large. They are energy producers, extractive industry, mining, etc. So they will not look like yours, but just understand that even them can produce a report that is not 80 pages long. The average was 34 pages and the median was 31 pages, but I think it's a super relevant number. The University of Sydney one, I believe, was 16 pages. So you can have an idea of how long they need to be. And there was a lot of white space as well. The other thing as well that is relevant to see is something that people are scared about, which is they hear that we have to link pay with climate goals or targets. That is not mandatory for year 1. You can do it if you want, but it is something that only half of the companies that we're reporting actually link their executive remuneration with the climate-related targets. So also to put people at ease, you don't have to do it. So you don't have to go on a very long, extensive process with your executives to make that happen. And finally is who is having an understanding of what's happening, even if you are a sustainability manager trying to get the work done. At the end of the day, the people overseeing these climate risks and opportunities, they are in majority this board. Board has final oversight about what gets signed off and how they get reviewed and adapted. So have this in mind when you're trying to build your ESG committee. At the end of the day, you have to report up to an audit committee or to a board member that has control over that. Of course, this is for large organizations, but have an understanding and a bit of a comparison between where you are and where they are and draw inspirations from that. We made it easy to comparing reports. We've released a tool, and I'll send it to everyone afterwards, that compiles every Group 1 company reports and puts them on a page, but also divides the sections into the different pillars. So if you're trying to understand how have they communicated in this particular industry, certain things like time horizons, and you want to copy and paste some sections and adapt them, you can. The reason that we've made this tool is so you can become more familiar on how reports look like. And going through the process of going to every sustainability page, downloading it to a PDF, searching it, not being able to compare it side by side, that makes the process a bit harder. So we've tried to centralize everything, and we'll keep on updating the database, but also allowing you to query and to see it not only by company, but by sections. Let me see every governance section of every report. And let me skim through that and understand how they mention different things. Might empower you to make better decisions in your own report and familiarize yourself with the sections as you continue. The other thing that we've done, which was the request of a lot of people in the past webinars, and this is something that Lockie has been collaborating in the customer success aspect, is can we have a template that shows me the minimum viable reporting for AAS2 that I can start seeing the text and the structure and adding my own version of it as you go to the process of creating the emissions numbers or doing your risk and opportunities workshop or your scenario analysis. So we also have that and we'll share that with you. But you can take this and you might not have everything to begin with, but you might do a first draft, and that's what you circulate with your committee, with your boss, with your executives, or with a consultant that's going to help you out. So you understand that there are parts that you're already progressing towards. Some are gaps you need to double down on. But having a foundation or an example that you can work from really facilitates how you communicate with your team. We call it a format or a template, but starting here can really speed up the process of what the end result might look like.
I'll just jump in there. A few questions from the chat. So firstly, somebody said that this is an excellent comparison tool. Please, can you share its details later on? And then a second question asking how many of the reporters in this data are listed companies versus unlisted?
I don't have the stat on that. I'll have to go back to you there was there's 30 companies analyzed. I'll have to check how many are public and non-public. But it's a good question. I know it from the top of my mind.
No worries.
In terms of the database comparison, yes, we'll share a link later after the webinar, and you can look at it at your own time. And of course, if you want to, any comments, add other reports, we're also bringing reports that are not S2 aligned. So maybe sustainability reports that also included in the database. You can search by industry and then have a look on what they look like. When you're doing or creating these template or having these workshops, and now the next session will be with Marco, how he's going to walk you through the readiness assessment, is understanding who should be in this room. And every company looks different as you go through the different pillars of the report and you join the other webinars. But understanding that you should be able to communicate or have direct contact with executives because they have this governance oversight. A sustainability team, which will act as experts, but also project managers of the whole work in collaboration. Finance and accounting allows you to access a lot of the data for emissions calculations, but also projections and impact when doing your risks and opportunities. And finally, if you do have a team that you might not have risk and compliance team. So they might already have done some work in what risk looks like to your business. You might have a risk enterprise management register. So you will include your new climate risks in there if it's available. If not, you can start from scratch, and we have templates that we can give out to you. But it's a really good inclusion. Not many Group 3 have legal and regulatory teams, but IT data management might be helpful if you are pipelining information, if you want to understand emissions on an ongoing basis or spend less time cleaning it and preparing it. Super recommended. And finally, procurement and supply chain. When you track your scope 2 emissions, which is emissions coming from your suppliers, being able to integrate modern slavery with emissions reductions and ESG scoring in one team is also super beneficial. They won't all collaborate at the same point in time to prepare your report, but if you are doing a workshop to introduce this into your company or to look at risks and opportunities, having one person from each team, it's super, super helpful. And then you can also document that as part of your upskilling internally. Any questions on that? So we've covered the different legislations, the different standards, the pillars including in S2, some examples of reports in the database, and a bit of which people should be in the room. Is there any questions on the topic so far? Because after we'll now move into Marco and the part of building a readiness assessment, and also hear a bit about his experience as a Group 1 organization.
There's no other questions there. So unless anyone has any questions they want to throw in the chat now, I think we're good to move to the next part of the session.
Perfect. Let me just stop sharing my screen. Can you still see my screen, or is that okay?
I know you stopped sharing and We will see Marco is able to.
I'm just going to launch another one. If you have completed readiness assessment, just putting that in the poll just now, and I'll share those results with Michael. So maybe, Michael, you can have that conversation, having that data. Thanks for everyone putting the questions in. 25 responses. Keep on climbing.
Let me know if you can see my screen in the meantime.
Yep, looks good.
So we have 80% of people haven't completed readiness assessment. So kind of that gives you a bit of an idea of how they might sit in the understanding of their own organization against the AASB S2, Marco.
Great. I mean, so hi everybody, I'm the National Director of ESG at Acumentis. One of the critical work that I do is really walk clients through, whether they're group 1, 2, and 3, the entire process from really understanding the S2 requirements all the way to delivering a report. And every single piece of work always begins with a readiness assessment. It really is the diagnostic tool that tells you, your team, your executive board, what you have already, what perhaps might be a partial gap, and what you have to work on. Okay. So what I'll do now is I'll walk you through a couple of slides on what we've done to date in terms of both being a reporting entity ourselves, as well as helping Group 1 companies report on this year. A lot of the learnings, as you'll see, is going to be very practical. And then we'll also finish with a tool that we use with all of our clients, which is our assess tool that, through 20 questions, 5 for each pillar, it then gives you a readiness score and compares it to your overall market. So feel free to ask any questions on the chat, and then we'll answer them as they're coming. So a little bit about us. Acumentis ESG is the national ESG advisory service within Acumentis. Acumentis is an ASX listed company. We do property valuations, business valuation, advisory, and we've been doing this since 1905. As an ASX listed company ourselves, we are a reporting entity given our size. And so really the job of Acumentis ESG is really two-sided. On one end is about internally doing our own work and doing our own reporting with our own measurement of scope 1, 2, and 3. But it's also about helping all of our clients and all the businesses within the market understand the importance of compliance. And so what we've done is the focus has always been about how do we simplify the complexity that exists and the dryness that perhaps exists through standards, and then really focus on commercial outcomes. Because I've sat on so many board meetings of so many executive teams, and so many of them just see this as a tick box exercise. And so my job and the job that I do with sort of our internal champion on the client end is making them realize that once you start looking at your scope 1 and 2 data, or even your scope 3, you start to realize that perhaps you have buildings that are not as efficient as others, or you might have waste that's much more pronounced on a specific building. It just gives you much more data that you can then go back and actually create some operational gains. Okay. So in terms of how we typically operate, it really focuses on self-reliant. We come in to all of our clients and we always say, we want you by the 3rd year to completely own the report. And this is fundamentally different than how typical consulting companies or most consultants work. But really for us, we see sustainability as being here for the long haul. And we don't want companies to be reliant on us to do the report. We want them to understand this, the requirements. We want them to acquire those skills. And so in the first year, we sort of say we lead and then they learn. In the 2nd year, they lead and we can support. And in the 3rd year, they completely own it. We typically are completely outside of that report making. And that what it does is that it gives them the confidence with enough time for them to build the internal capability. And I've spoken to some of the largest companies within Australia, and they're doing this internalization of skill. They don't want to be reliant on consultants. So for us, it's really important that anything that we do with our clients, we bring them into the journey. We show them the tools like NetNada, and we show them what we're doing and why we're doing it. Because once they understand it, then they can go back to the board or the executive teams and drive this, in their own voice, in their own tone, in a way in which they know that it will get approved. And then continued improvement is a critical part of this. But you only can achieve that once you've got understanding of how it works. Our approach to reporting is really sort of splitting the 4 pillars and the 50 plus pages of the S2 report into 5 phases and making them super simple and saying this is who we need from the client at different points. So in terms of the phases, the first phase is diagnostic phase, which is it begins with the readiness assessment. It asks you how ready are you, what are your problems, what are you not thinking about that you might need to disclose. The second one is measurement. That's where having partners like NetNada is so critical, because together we work with the client to make sure that we have all the data required, all the invoices, and then we can put those in and measure those scope 1, 2 emissions in the first year. Modeling is about really looking at the strategy pillar, right? It's saying, once we've identified those risks, what do they look like over the short, medium, long term and the different climate scenarios? And the fourth one is integration. This is a really important one because a lot of the executives that we speak about S2 is the importance of integrating this sustainability report within the broader financial reporting, but also within the broader business as usual. And so this is really about how do you make sure that you connect the financial statements report that you have with your sustainability statement, which is a requirement of S2. And the fifth one is reporting, is how do we put everything together. One of the things that I've added in here, and I've put it as optional, but a lot of companies that we work with, and you'd be surprised, even group ones, they need help with data digitization. We worked with businesses that, have got $1, 2, 3, 4, $5 billion in revenue, but they are still just a perhaps maybe a family business that has grown tremendously through the decades, but don't have the data quality that's required for scope 1 and 2. And with the help of NetNada, we're able to do that work. So that's how we typically deliver the work, whether it's a group 1, 2, and 3. We always follow these 5 phases, and it makes it really easy because I'll show you through the different slides. Each of these phases has got different involvement from the client end, but also different deliverables.
One thing to just share with that approach, which might be useful, especially as Marco comes with the next slides, is that methodology that Marco is describing is something that, you should, of course, with Marco's help or external help is easier, but trying to visualize that within your own business regardless. It's a good mental model to have on how over time you're going to improve how it's done. So just take that as best practice, what Marco's explaining, and visualize how does this adapt to where I work as well. So super, super useful. Thanks, Marco.
And no problem. And then what we'll see through the readiness tool is, there is all these 5 phases. There is a lot to do. There is 150 plus disclosures. How do I make sure that, I work through 5 or 6 work streams? So how can I pull all these 150 disclosures into perhaps categories? Let's say critical, high priority, medium priority, and later stage. So that's all work that we do with our clients, whether it's through a executive briefing where we come in and we explain, this is your position, this is how ready you are, and then we give them a 90-day plan that they can then go out and execute themselves. Or they can sort of say, hey, we want your help. And if they want our help, typically this is what we deliver. So this is what we deliver for each of the phases. I won't go through each of them, but we'll share the slides afterwards. But really what it is, it really maps out each of the specific requirements from the S2 standards and says, okay, what is an actual output that's required from the work that's been done and conducted? And so for each phases, these are some of the key critical things that we work on. And as I said before, in phase 4, embedding climate into a risk framework is super important. Don't go out of your way and develop a new risk framework. You probably already have a risk framework that your board or your management team is using for cybersecurity or reputational risks. Just make sure you embed climate within that. It's just another business risk. It shouldn't be treated differently. It shouldn't require a different approach to it. It's just another business risk.
One thing as well to mention on that, which might be useful, is think about that list and have a look at it and say, what am I good at as my team and what I'm not good at, and figure out where you need upskilling or contracting out or technology will support you. Because it might not be one size fits all, but figure out where you can excel and figure out, I need X, Y, Z to help me out with this. So it's also really good kind of list out of capabilities and things that you know or don't know how to do.
That's so true. And some of the work that we do with our clients is we call it sort of, they hire us as experts. So they know that they're doing the diagnostic really well. They know how to do phase 2 really well, but they sort of see phase 3 as risk and scenario analysis as quite hard. So what they do is say, hey, can you come in and help us, deliver that piece of work? So we come in, we help them deliver it, we upskill them so that the next time that they're doing it, they've got all the tools, all the technology that they don't have to rely on us again for that. This is an indicative timeline. So bear in mind what it represents is how long each phase takes. And why I'm showing you this is because I remember when we were starting out, this is all the information I wanted. I wanted to know what were the deliverable at each point in time. I wanted to know, can I start, measuring before I start modeling? Can I put a target before I have baseline emission? No, these are all things that mostly are gated. So you have to have some dependency of what you have perhaps decided or measured. And so putting a timeline into this is really important. This is just an example. We've done work that's longer and shorter. But as you can see here, there is, on the reporting side, we've allocated about sort of 60 days. And that's really to work with the assurance company to make sure that they are happy with the report that we've provided. So typically the work that it sort of takes us, it probably takes us about 90 days if we're really going hard at this and we've got a really strong, deadline to meet. And then it's about working with the assurers to make sure that, what we're doing is working and we've got limited assurance tick off from them. So that's typically how those phases run.
I'm just going to launch another poll while you're going, which asks what's the biggest challenge that people kind of look forward to in this reporting with the information that we gave so far. Out of that, of course, we went high level on every single one, but between governance, strategy, risk, metrics, and targets. So we can get a sentiment out of that.
Yeah, let me know what they say. Yeah. In the meantime, what I'll say is day in and day out, what I always see is that fundamentally education is the biggest gap. Once, whether it's the board, whether it's the executive team or your risk manager or your finance leader, once they understand what it is required from ASRS and the importance to do it, because not doing something doesn't just allow you to stay where you are. It actually creates reputational risks. You have financial repercussions from that. And so for us, education is the biggest risk that we've identified. And so what we've done is, if you head to esg.acumentis.com.au, we've created, entire videos and modules for everybody to sort of come in and learn the process that it takes for a company to disclose from, a novice all the way to reporting. So within our website, you'll be able to sort of learn the different ASRS, the different pillars. We go into details. Those videos are about 10-minute long, but then we always very practical. We have an example company that we take through the entire report. And so at the end, you can sort of see, what it looks like to do the entire journey. So feel free to head there, or if you've got issues or want to learn more about, just let us know. We can share more information there as well.
In terms of responses, we have a very flat split, kind of 25 on each of the pillars. So I guess people are playing to their strengths.
Okay. Well, I think, look, it's not varied because it often varies companies to company. We have companies that are incredibly strong in data. We have companies that are incredibly strong in governance, but perhaps are lacking the data. And so the importance of doing the readiness assessment that we'll do very shortly, it's sort of seeing and realizing, hey, actually, we're not as good as others in the governance side. That's probably where we need some help. Now, one more thing I'll do is sort of talking about the reality of reporting. Now, we worked with many clients, and really there is two opposing clients that we typically see. A minimum viable compliance client that come to us and say, Marco, all we want is a tick and we want to move on from there. We don't want to spend too much time on this. We want to report. We want to make sure that, our directors are not liable. But we don't want to spend 1 cent, 1 more hour working about this. And then there is, on the opposite end, out of scope assurance, where we've got companies that say, no, we want to do everything. And we want to make sure that even though in the first year we only have limited assurance, we want to test what it would look like to have reasonable assurance. Okay. So those are extreme. And that's typically where most of the companies sit. Either do the minimal viable compliance, or they see this as actually, this could be something that helps attract new clients, help us enter new markets. And so they're putting that investment into it. I'm not saying that one is better than the other, but what I'm saying is the reality of reporting is that they typically sit either on the minimum viable compliance or they're sort of doing out of scope assurance. The last one is tools. So we've developed a number of tools internally, and then we are incredibly happy to be working with NetNada. NetNada are helping both with the data within own reporting as Acumentis group, but also with all of our clients and that measurement sort of phase too. So in terms of the other tools, we have the Assess tool, which I'll go through it now. And then we've got the Action tool, which allows to capture on-site asset sustainability data. And then the Acumentis Academy. The Acumentis Academy is an education and guidance module where we walk through 10 modules that teach everybody, whether it's a board, an executive, a practitioner, what it looks like to sort of report. And it's different from sort of those videos because this is mostly text-based with quiz and CDP hours. So if you're interested in learning all about that, just go on our website. We've got everything on there. So what I'll do now is let me see if I can share my screen.
Any questions for Marco in the meantime? We have 9 minutes to go.
Okay.
Perfect.
So I will share my screen. Let me know if you can see this.
Yep.
Okay. So this is a tool, as I said, our Assess tool. And what it does is it asks you critical questions around the 4 pillars that we talk about. So let's say we took an example. Let's say we take the Arnold's Group. We want to sort of understand the industry sector. So they make biscuits. So let's say that they would go under the manufacturing. An example of why that's important is because at the end it sort of compares with industry metrics of that industry sector. Okay. So governance at the top here, you can sort of see that's the first pillar. And you can see here 5 questions. The way in which this is structured is really simple. It asks you how from a 1 being none to 5 being embedded, how ready are you when it comes to that statement, okay? And then what it does is that it tells you actually where within the framework this is requested. So what we'll do is we'll run through an example and then we'll show you sort of what it would look like. We'll assume that this company has a poor governance, perhaps has a strong strategy, has a poor risk, and has a strong metrics and target. And we'll see what the report says. So let's say that they currently don't have a committee that's formally charged with an oversight of risks. Let's say that because they don't have that, they currently don't have a standing update frequency. The management role or committee with named accountabilities for climate is ad hoc. Climate risk at the board and level is none because they've just perhaps began that journey. Let me just move that there. And there is no remuneration policy tied to metrics for senior management. Then you go into strategy. Then again, this asks you within the paragraphs of strategy, those critical questions. So have climate-related risks and opportunities been identified? Again, let's assume that they have a strong strategy pillar. Let's assume that they've been defined. Let's assume that they have defined their time horizon as short, medium, and long term. Again, one thing mentioned in here is short, medium, and long term. These are specific to any company. So they typically would vary depending on your industry, depending on how your business operates. So it's really specific to your business. Have we described the impacts on the business model, on the value chain, and the financial planning? Let's assume that that's been defined. We've provided a qualitative scenario analysis, and we have created some transition plans, and they're embedded within the strategy. Then we go into risk management. We said again that we might not have strong risk management exercises. Again, this is a case study just to show you the tool. Typically, what you'd have is if you've got a strong strategy, you typically also tend to have quite a good risk management framework because they go hand in hand, right? So the comment before of, we do it together, we tend to sort of run them not together, but sort of concurrently, sequenced as well, because they are very much one of the same when it comes to sort of risk identification. So again, this is just purely an example of sort of showing you the tool. So they've defined ad hoc. They have not yet integrated within the enterprise risk register. The process to manage and escalate risks has not been determined, and there is currently not a periodic review.
Also, while you answer these questions, if it's always none or you don't have it, don't be scared. It's okay to start from from zero. Don't expect just because there's a 5 as embedded that you have to be there.
That's right. A lot of the businesses that we work with, they often start with less than 20% as an overall score. And what we do is every month we update because of the work that we do. They're getting better and better, right? And so their readiness to report becomes much closer to sort of the 100%. So let's assume, again, they have a strong metrics and targets. So they've defined an organizational boundary. Scope 1 and 2 inventory has been done through NetNada, and now it's been embedded. Scope 3 relevance has been assessed. That's called that's been defined because it's the first year. Climate target has been set. And then we have determined an internal carbon price or a shadow price. Now, what this does is then it asks you one more question. Again, and it ties the question. Which of the two are you sitting? Are you doing minimal compliance or are you doing capability building? For this exercise, I'll do minimum viable compliance. Then you can, in your own time, you can sort of see how they would differ. So what you then have is, the group. You can then calculate your reporting group. So let's assume that they, have got 500 employees. They have $100 million in revenue, and then they have about $1 billion in assets. Of course, we would know that they are a Group 1 company. So this says that overall, they are 49%. The industry benchmark of manufacturing is 48%. So they are at the industry average. And this is where you can sort of see your strength and weaknesses. So we know governance is not where they sit. Strong strategies, it's about 75%, risk management 15%, metrics and target 75%. Here, what this does is that it then shows you your top strengths and your top weaknesses. And that's, again, important to sort of, like Afonso was saying, what's working, what's not working. Okay. And then from here, you then have a 90-day action plan. What this is doing is saying what you should be spending your time within the next 30, 60, 90 days. Internally, we work in sprints, which is a 30-day sprint of what do we want to do and what's required. So this tool, it sort of gives you exactly the steps that you need to do and then the number of internal hours that takes. Because that's really important. Once you know what you need to do and how long it's going to take, you can draw in the right people within the business, okay? So you can then open this up and you can sort of see the different steps, the different audit evidence required. For month 2 is the same. I'm just conscious of time. Month 3 is the same. This is deferred items. Again, if you're doing a minimum viable compliance, you might be deferring some of this through the ASRS transition relief. This
Marco,
gives you then
I'll have to kind of interrupt, just conscious of time.
Yeah, no problem.
Is there any closing remarks you wanna share?
Look, the main thing is you learn by doing this stuff. Okay, so for me and for everybody that's starting this journey, the best way is just to begin. And you begin by doing a readiness assessment. So don't be afraid of getting a score that's perhaps 10, 15, 20%. So just get started. Yeah. We're here to help. NetNada is a fantastic resource. Acumentis ESGs, we do a lot of work, whether it's with Group 1s or 2s or 3s. We're here to help. Reach out. But yes, just get started.
Awesome. Thank you so much, Marco. Really appreciate your time. And I think seeing your thought process behind how you help clients is really helpful, I think, for the audience. For everyone in the audience, please share this with your colleagues and join the next sessions. We'll be circulating all the materials that we've spoke about, including Marco's Readiness Assessment tool and contacts as well. And remember, there's some time, but not a lot of time. So get started as soon as possible on either the upskilling journey or understanding where you are or some components of the reporting. Thank you so much and have a fantastic end to your day. Thank you.
Thanks, Aparna. Thanks, everybody.